Welcome to Second Take, the show that focuses on the issues behind the news. A new collaborative China-Africa private equity fund, as well as the second New Africa Mining Fund, has been launched to boost mining investment on the continent. Mining Weekly editor Martin Creamer tells us more. Welcome, Martin.
Thanks, Shannon.
Let's start with the New Africa Mining Fund. What is this about?
This is a very high-risk fund. This is the early stage of exploration and development. There should be a lot more of this. And you can see how risk-averse people are in South Africa, institutions, even the developmental institutions, because, when we heard about the New Africa Mining Fund 2, because we had introduced the New Africa Mining Fund, the first one, coming in with the second version, they originally hoped to raise $300 million, and they've only been able to raise $120 million. So even from the developmental finance or the development finance institutions, there is a hesitancy to go into this high risk early stage of exploration, but it's absolutely vital because without that you don't get the big mines, and so these people are playing a very important role. And this was born in the early 2000s, the idea. We had Richard Linnell, who's still involved with Vele, and we had Chris Thompson of Goldfields in South Africa, Chris particularly came from North America, and he realized you need the seed capital, you need this venture capital if you're going to get a junior mining culture developing in South Africa, which we're so short of. And so they had the Bakabung initiative, and the New Africa Mining Fund was launched. And it was also with Arthur Machiachidi, the late Arthur Machiachidi, and Neil Gardine. Neil is still, carrying on the charge, but again, he's backed by developmental institutions. I mean, you've got the IFC, the International Finance Corporation, linked to the World Bank. You've got the Southern African Development Bank. You've got the African Development Bank. And of course, these banks also have to be very cautious. I mean, they can't lose their money. The first fund, I think it had a net return of 26%, which was excellent. But to repeat that now, they have to do incredibly tight due diligence to make sure that they get the right projects on the go. And it is a bit of a pity that more people can't come into this level of funding, because this is where it all starts.
Now, in what type of projects will NAMF2, as it's called, invest?
Yeah, so they'll go into that very early stage of exploration in the main. They might also, for the investors, if they get an opportunity, go into sort of maybe a stage where there's a feasibility study, so it's a little bit later, and maybe towards a bankable feasibility study, and then harvest some of that for their shareholders. But in the main, it's this very early stage exploration and development, and they've got about $120 million to spend, so it's close to R1 billion, and they're open for business.
And they're not focusing on any particular commodity, or is it general? Because
of their mandate, particularly with the International Finance Corporation, they don't want any radioactive metals or minerals, so they can't go into uranium. So it's associated eventually with weapons, so the IFC won't go into that. And because diamonds have picked up this taint of being blood diamonds, the IFC also, it's not only the IFC, there are others, the other funders who are a little bit reluctant to go into diamonds. So their mandate excludes uranium and diamonds, but virtually all the other commodities, including the bulks and the iron ore and the manganese, they're keen on gold, particularly in West Africa, they'll go for.
Now, the China-Africa Fund embraces value-adding beneficiation in Africa. Can you tell us about this fund?
This is a very important aspect, and it's launched this week while our President Jacob Zuma, is in Beijing, and they're doing some hard negotiating with the Department of Trade and Industries Minister Rob Davies. Dr. Rob Davies also there. So South African contingent there. And at the Africa Mining Congress, then, a former official of the government, Dr. Alistair Reiters, who was the Department of Trade and Industry Director General for 11 years, he concurrently announced this new fund, which is a very interesting one. And it is the the name is the China Mining United Fund, and it's also the second fund. So they've had this elsewhere in the world. But what Africa has been saying to the Chinese is that we've got a different situation to these other countries. You know, it's all very well for the Australians to say, you know, just dig a hole, pull out the metals, put it on a train, get it to the port and get it to China, or they'll make the best of it because they do things cheaply. Africa's got a much different situation. There are a lot more people who are unemployed. So China is saying to the Africans, we want your metals and minerals. And very importantly now, collectively, the Africans are saying to the Chinese, but we want industrialization and reindustrialization. And the Chinese are not walking away from that. They say, okay, well, let's work together. So this is a collaborative effort where there's a very important value-add aspect to this fund. They are wanting to come into operations that are close to production. So they're a little bit risk-averse. I would prefer them to come lower down the line and start with, you know, early stage exploration as well. But they're a little bit reluctant to do that. I think they made $1 billion on their last fund. They're $1 billion. So I think they invested $1 billion and came out with $2 billion. So these equity funds are always looking to harvest. You know, so with this particular one, they'll probably also have a commitment period about 7 years or more, in which they will help mines not only to produce those metals and minerals, but then to take those metals and minerals and to make sure that they refine them. So, you know, there'll be a refinery aspect. Make sure that they then look further downstream to see what opportunities are there, business cases to do more in Africa, and exhaust all those business cases, even looking backward. You know, can we use equipment here that is manufactured in Africa and you know, side linkages and spatial linkages, and can we put in more roads and all that sort of thing to float many more boats with this. So that part of this new fund, this China Mining United Fund 2, I think is very, very important, and it's a collaborative effort, and it shows you how important collaboration is.
And there again, you could get business, labour and government involved in that.
Business, labour, government, civil society, communities, you know, get everyone involved, because, you know, those communities, the linkages are also there for community involvement, particularly as you go downstream. I mean, it might not be important for people to think of those local businesses you can create. They might think, well, they're a bit menial, but it's very important to the local community to get involved, even at a menial scale. But with this fund, they're looking a little bit broader than that. They're saying, well, look, let's go for downstream beneficiation wherever there's a business case. Let's go for side stream beneficiation. Let's go for backward integration, you know, so that we can even prepare some of the equipment, if possible, or parts of it in an area. And let Africa work together here so that they can create a lot of jobs and wealth. Because there is this issue, though, if you're mining like that and the commodity prices are high, your currency makes you uncompetitive. And that is what they're going to have to look out for. You know, you're going to need some very good macroeconomic policies to make sure that your currency is competitive. Because it's no good trying to manufacture something if you can't sell it, you know, or if you can only sell it locally. And the only way you'll be able to sell it is to make sure that your currency is competitive. And, you know, the Chinese are a little bit hectic at that. They make sure their currency is over-competitive. That's why it looks like they're a cheap producer. But in actual fact, they don't allow their currency to float. I mean, a small little country like South Africa allows its currency to float. So if those commodity prices are high, you know, our rand gets stronger, we can't export. That's why we need some very good macroeconomic policies to make sure that our currency is competitive. Otherwise, we won't be able to sell anything that we produce downstream.
Now, these funds clearly see an investment opportunity in the current depressed global economy. When do they expect to make their first investments?
Well, you know, you've got the New Africa Mining Fund. I think their announcement is going to be imminent, like I think the next 2 or 3 months. You know, they will actually know where they're going to make their first investment or first investments. With the China Africa Fund, I think the representative in South Africa is the Kermas Group. And that is interesting because Kermas has its roots in Croatia. You know, now you can see that these foreigners have sometimes got far more mental alacrity than the South Africans who go to sleep at the wheel. You know, here's this Croatian-based company, active in South Africa, actually going to China, with the South African contingent and doing something bigger for Africa. And it doesn't actually affect Kermas directly. They are the conduit. They are part of this fund. So you won't say, well, look, I'll be investing in Rookie South Africa because Rookie is controlled by Kermas. You will be backed by the China Mining United Fund. In that will also be Kermas. In that are a whole lot of alliances. If you need geological help, there's geological help. If you need equipment help, there's equipment help. If you need engineering help, it's there. So I think that that is the quid pro quo the Chinese are looking for, that their engineers build the plant. You see, they're also looking for some added value themselves. And so this collaborative effort, they've agreed on that. And they are seeing the current depressed situation as an opportunity, because there might be people who have overstretched themselves financially who are looking for an additional shareholder now to inject some funds in so that they can do that expansion that they're planning. And here they've got this capital. They haven't actually announced exactly how much this fund will have. Now, we pushed them for that, and they said, well, the last one opened on 1 billion and closed on 2 billion. Hopefully they've got a couple of billion. We've just taken for granted that there's going to be a couple of $1 billion there to come in. But we note with the Chinese, they're always prepared to add the money provided there is an opportunity for them. It's predicated on urbanization continuing in China, industrialization continuing in China, so that there is this demand for metals and minerals, even though we see the Chinese economy slowing, down to 7.6%. One report said this morning, but I've heard it could go as low as 6%. So that's very low for China. China is normally up to the 8 to 10% growth. So it's almost a recession in China. But despite that, they see that there's a belief that there's still a strong appetite for these, which will mean that the demand is there. Therefore, the supply must arise. And there are a lot of financial strains around the place, and they feel that with a funder, with deep pockets, there could be some injection of funds that could get this moving.
Well, thank you very much, Martin.
It's a great pleasure, Shannon.
That's the show for today. Join us again next time for more news and insight into what's happening in the mining world.